Today is Friday, September 9th, and this is the ADM Investor Services Weekly Market Wrap-Up. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, the Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Alan, let's start with the Treasury bonds this morning. This week, the bonds fell below the 170 support level. What do you feel is the outlook for bond futures now?
Well, we still feel that the bond market will continue to come under pressure. Yesterday, there was severe weakness in the bonds on basically neutral to only slightly bearish news, but there was a very hard decline. So that was a sign of weakness for the bonds to overreact to just neutral to possibly a little negative news. But there was some follow-through weakness today. Today's weakness linked to Rosengren's comments of the Fed becoming a bit more on the hawkish side. Also, we had that 170 support area, as you mentioned, taken out. That is a very negative sign technically. So our outlook is for lower prices across the interest rate futures market spectrum, especially for the bonds as inflation starts to tick up.
Yeah, as you said, the prospect of a Fed increase back in the news today. Any change in regard to your bias that the Fed will refrain from a hike this month?
No, I don't think they're in a position to raise rates this month. They may raise in December, maybe not till next year. The Fed tends to like to not be political or look political, so I think they will refrain from any type of action, which they normally like to do. They like to stay away from sensitive periods, especially with the elections coming up. So look for no rate increase in September, maybe December. Either way, the Fed is going to be very slow to raise rates, in our opinion.
Steve, getting closer to harvest now, and we have a USDA report on Monday. What's the latest in the grain markets? Any possible surprises?
Well, the USDA monthly reports are always a surprise. And I think what the market, the funds are going in long beans and short corn and wheat to this report. It's interesting, seasonally we sometimes make bottoms early in years in which crops are big because we're traded all the news all year long. Going into the report, I think that the market is leaning towards they might lower the corn crop a little bit. The early yields are not record. They're not disappointing, but they're not as good as people thought. We have a few cases of some diseases floating around, and so the market thinks that they could lower the corn crop. On the other side of the coin, the bean crop looks better than what they said in August, so they might raise that crop, but they could also raise demand to offset that. So we could actually have a little friendlier report if they lower the bean carryout and lower the corn crop.
What about weather? Looks warm and dry across the U.S. Midwest. Any concern here?
All spring and summer long, our weather guy was looking for us to switch to La Nina, which would give us a nice, dry, and warm fall. And recently, he changed his mind. And he said now, because we're not in La Nina, and because of the active Atlantic hurricane season, we actually could see a wet fall. And so we've got rain coming across the Midwest yesterday and today. We have another big rain event across the Midwest late next week. And so the forecast now is for normal rains this fall. It is interesting that the Farmer's Almanac came out and said this winter is going to be cold and wet also.
Back to you, Alan. Gold futures seem to be building a congestion pattern. Will this market break out soon? And if so, which way do you think the market will go?
Well, first of all, we had a very nice advance in the first quarter, followed by a congestion pattern. Currently, we are seeing some pressure with the hawkish Fed comments today, but the rule of thumb is that anytime there's a congestion pattern, that a market will break out of the pattern in the same direction that it moved into that pattern. And so in this case, since we came in from lower prices, most likely we will break out to the upside. And the probability is about a 60 to 65% probability or chance that we will come out to the upside. So because of that technical rule and our belief that inflation is coming back, our feeling is that gold will continue to advance. And I think we can see some new highs for the move within the next 3 to 4 months.
Let's talk a little bit about the upcoming presidential election. Steve, will the agricultural business landscape be affected by this election? And who is the most friendly toward the farmer and ag policy, Hillary or the Donald?
Well, I mean, I think that's really a difficult question to answer because they are not talking ag at all. And so if you try to pick out what some of their aides are talking about, Hillary is against refined oils and renewable energies. And so that would be bad for the corn market, it would be bad for farmers, and bad for the ag industry. As you call him, the Donald, he's worried about trade agreements. He would go back, and not only would he redefine some of the trade agreements, but he would put tariffs on certain items that are coming in from the United States, from countries that are abusing our export-import balance. And so that smells like protectionism. And so I would be concerned about if he got his way and redefined these trade agreements, it might be negative. The problem is we do have a government of balances. And I really don't think Congress would let him, unless he did executive decisions or use some of the things that Obama currently is using to get around Congress, I don't think Congress would let him redefine the trade agreements. But the bottom line is that no one's talking agriculture.
Alan, I would ask you the same regarding the stocks in general. How will the stock market be affected by the presidential election, and does Wall Street have a favorite?
Well, I feel that, of course, individual sectors, depending upon who wins, will be favored or disfavored. But I think the overall averages will not be affected by whoever resides at 1600 Pennsylvania Avenue in January. As long as interest rates stay low and the Fed is slow to raise rates, the outlook for the indices remains very bullish. So I would not put a lot of time and energy into looking at the presidential situation. It's interest rates that dominate. Interest rates are going to stay low globally, and that will continue to be the fuel that propels stock index futures to new highs across the board.
And Steve, you mentioned to me that Dave Hightower, who's one of our analysts here at ADMIS, is bullish the stock market no matter whether the Fed raises rates or not. Why do you think this is?
I think Alan did a really good job, and Alan has been hitting the markets very well up to this point, in that as long as interest rates stay low, the equities should trade higher. Cheap money will go into the equity market. He also believes, like Alan, that eventually commodity prices will make a bottom, and that you'll start seeing interest in buying the commodity prices as prices get cheaper. So I think it all falls, like Alan says, on where interest rates go.
Remember, the views and opinions expressed today on this video are solely the views and opinions of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like information about the brokerage services offered at ADMIS or would like to open a trading account, please visit www.admis.com.